the United States and China announced a 90-day suspension of recently imposed tariffs. This decision brought relief to global markets. The S&P 500, Dow Jones Industrial Average, and Nasdaq all surged. The euro and yen weakened against the U.S. dollar. This initial market euphoria reflected optimism about a potential trade deal. The tariff suspension marks a significant development in the ongoing trade war. The U.S. reduced tariffs on Chinese goods from 145% to 30%. China reciprocated by lowering tariffs on U.S. goods from 125% to 10%. This truce aims to provide breathing room for negotiations. The U.S. and China have established a negotiation mechanism. Vice Premier He Lifeng will represent China. U.S. Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer will represent the United States. These high-level talks aim to address the underlying trade imbalances. Despite the initial market rally, long-term investors remain cautious. The 90-day suspension is temporary. The underlying trade disputes remain unresolved. This uncertainty could impact business investment. Companies may delay major decisions until there is more clarity. The fragility of the truce is a cause for concern. The tariffs could be reinstated if negotiations fail. This could lead to renewed market volatility. Investors are wary of the potential for escalation. They are closely watching for signs of progress in the negotiations. The temporary nature of the truce creates a climate of uncertainty. Businesses are hesitant to make long-term commitments. This hesitancy could dampen economic growth. A lasting agreement is crucial for restoring business confidence. The trade truce has significant implications for China plus one countries. These countries benefited from the trade war as companies sought alternative manufacturing hubs. Vietnam and Mexico saw increased investment. However, the tariff suspension reduces their competitive advantage. The truce puts pressure on China plus one countries to offer better deals. They need to attract investment and maintain their competitiveness. Vietnam, for example, saw a decline in foreign investment pledges. This decline highlights the impact of the shifting trade dynamics. Despite the truce, strategic decoupling remains a risk. The U.S. and China are increasingly competing in key sectors. These sectors include advanced semiconductors, pharmaceuticals, and strategic metals. Companies in these sectors face continued uncertainty. Investors face a complex landscape. The trade truce offers potential but also uncertainty. Short-term strategies should focus on managing volatility. Long-term strategies should prioritize diversification. In the short term, investors should fortify their portfolios. They should ensure they can withstand potential market swings. This may involve adjusting asset allocation. It may also involve hedging against downside risk. In the long term, diversification is crucial. Investors should reduce their reliance on any single market. This includes China. They should explore opportunities in Southeast Asia, Latin America, and other emerging markets. The trade truce is a positive step. However, challenges remain. Investors need to stay informed, adapt to changing conditions, and make strategic decisions to protect and grow their wealth.